Good afternoon. Today is Thursday, April the 6th. The time right now is 16 minutes past noon. Over there on Wall Street, we have a bit of a retracement going on. Basically, there were two economic releases. Basically, both are not that friendly towards equity. First of all, we have the ADP employment change data that came in. Market was expecting 21,000 new jobs being created. In fact, it only came out 145,000. So it was definitely below market expectation. But this is no surprise because the ADP numbers has never been able to get a very good estimates of the real situation. Anyway, the other one that actually caused the market to come off was actually the services PMI. Market was expecting somewhere at 54.4, but came in only 51.2. So this is already bordering on contraction because anything below 50 is contraction. So we all know the US economy is largely a service economy, not so much of manufacturing, although that still plays a part. But the services PMI is what people are looking at, and the fact that it has actually contracted more than what the market expected. So this is actually a negative for equity market. So it's only natural that equity prices come off. And on top of that, we have Good Friday coming up tomorrow, and that will be half a day of trading. Basically, the US bond market will open for half a day, and then we have non-farm payroll. So going into a long weekend, reduced liquidity, the market obviously wants to play safe. So it's only quite reasonable to expect market participant to pare down the position going into the weekend. So this will actually give us a chance to actually, for those who miss out buying, to actually see if they want to go in to buy at a lower price. Now, if there's going to be any kind of pullback, the high traded in the Dow Jones so far this week, it has been 33,634.7, and that was traded on Tuesday. Yesterday, there were no new high. And if the market continue to pull back, I think somewhere around the 32,720 is possibly where the market may hold. This level is actually a 50% mark from the low of 31,429 to the high of 33,634. So this is the midpoint, and midpoint usually plays a bit of a role in containing either market rally or in a corrective pattern. Okay, so this is basically all we can expect. In the S&P 500, we saw that the prices actually traded to a high of 4,133 on Tuesday, very close to my target range of 4,140 to 4,195. Okay, so it's not that far away, and this we have a very neat equality move of a three-wave rally from 3,808. Again, the 50% mark of this entire range is from 3,808 to a high of 4,133. The midpoint is somewhere around 4,021. So we will see whether the 4,020 levels can actually act as a kind of support for the market, because there's nothing in between until 3,909. So we will take the midpoint of these two extreme prices to use as a guide to see if the market can actually hold out. Over in the Nasdaq 100, the market dropped 1%, which is a lot more, about 50% more, 50% more than what the Dow Jones and the S&P 500 actually suffered overnight. So the decline in the National 100 was actually more pronounced. The high traded is at 13,204, which is traded on Tuesday. And again, the low started off from 11,000, almost 700. So we can find that the midpoint is around 12,445. So let's see whether the 12,445 can actually hold this market here. But basically, the market is still in the uptrend for now. So we will have to see what happens thereafter. Okay, and over in Asia, we can see that the Nikkei continue to slide. This whole week, we can find the Nikkei started to slide from a high of 28,282, and this is quite a bit of a drop because in just over a period of 48 hours, okay, the market has actually dropped 50%. So this is actually quite a fierce drop on a relative basis. So if the market can actually hold out at 27,260, it may actually contain this pullback here. We will have to see whether it can do that, because right now the market has already pulled back 50%. So we will see it will continue to slide later on in the afternoon. Over in the Hang Seng, we can see that the price did not quite get into my target range of 20,800. Market high was 20,721, and then basically stuck there and has been pulling back since. Okay, so short term, I think the market is still bearish. We can see the overall pattern of this market here is basically suggesting that we may see further deterioration in market prices. Okay, over in the CSI 300, which is the mainland Chinese equity index, prices traded very neatly into this target prices of 4,101 to 4,113 with a high of 4,103. So the market actually have a three-wave rebound, equality, and then come back down. I think the market may actually, technically speaking, may see prices coming back down to 3,935. Okay, over in the energy market, we can see crude oil prices has stopped rising. We have the market reaction over on Monday with a big gap up because the OPEC Plus decided to cut production of something like a 1.116 million barrels per day on top of what they already cut last November, taking the total production cut to 3.66 million barrels a day, which is huge. Okay, and that caused the market to actually spike up on Monday opening. Unfortunately, I was holding on to short position on Friday going to the weekend, and this gap up caused my stop to be triggered at a high here. And currently I have no position, but if the market can pull back somewhere between $75 to $77.50, I am prepared to go in to buy, because I think the market, because of the new consideration of production cut, because this cut will last all the way to the year end, and it will have a long-term implication here. So I think the market may have actually turned bullish because of this particular development here. So I'm prepared to go long at $77.50 thereabout. Okay, over in the gold market, we can see the triangle pattern has been playing out very, very neatly, and right now we have a bit of a corrective pullback. Yesterday we have a new high on an intraday basis at $2,032.11, and this from the low of 1949.8. Okay, is actually accounts for 10% rise in just over a few days. So this is Friday. So this is Monday, and Monday to yesterday's was only three days, so over 72 hours, gold prices have risen 10%. That is quite chunky. So if the price can pull back a little bit, which what we are seeing currently, because dollar is rebounding, right? So it causes gold prices to come back down. So there is a correlation here. So if prices of gold can continue to slide all the way to 2001 to 1991, for example, I think this is an area of opportunity here, because this is also very near the point of breakout. So I think if the market do come back to this kind of prices, I'm prepared to add to my long position. Essentially, I already went long on Friday at 1,960, and so this is adding on to the to my original long position, because I have a target somewhere at $2,060, although the potential can actually rise to $2,069. So anyway, at $2,060, I'm prepared to get out of my position and then stand aside and wait, because after that there is a risk that the market may reverse violently downwards. So I want to escape that reversal here. Okay, over in silver, we see very little pullback. In fact, yesterday we have a marginal high at $25.14. So we have seen a bit of a pullback. It's very unlikely the market can pull back all the way to $24, but anyway, we will see what happens. Okay, I have no position in silver. Over in dollar, you can see the dollar started to rebound, but not before it registered a marginal low at 101.09 before it started to reverse. So this is telling us that the dollar overall is still weak. Okay, and this rebound can only be taken as a technical rebound, and if the price goes up to 101.92 to 102.12, I think that will offer another opportunity for me to get out, because I have actually gone long dollar index. So I intend to get out around here. Okay, and see and step aside, because I'm not so sure I want to participate on the short side, because prices is a little bit low anyway. So I'm just going to get out on my long position just to be sidestep this move and then see what happens next. Okay, over in the major currencies, we can see sterling continuing to edge higher at 125.25 before pulling back, and similarly, I have also gone short on sterling, so this is a good price for me to get out on my short position at 124.30 levels. I'm prepared to get out, lick my wounds, and call it another day. I also have short position in euro dollar. Market went down to 109.73, so at anywhere between current prices, I'm prepared to get out and to sidestep this move here. Okay, in the dollar yen is where I'm actually very excited, because I actually gone short at 133.60 levels. and prices had gone down to as low as 130.60, and we have a bit of a rebound in late New York trading. So this rebound may cause prices to go back up to 131.80 levels. If it does, I want to add on to my short position because I think the 129.60 may not even hold. My target right now is at about 125. Okay, 125.650. So I have very bearish view on dollar versus the yen. Okay, and this is because the yen is still the safe haven currency for now, because I don't believe the banking crisis is anywhere near over. We may see further deterioration in the banking crisis, because right now we are beginning to hear it has spread over to the REITs. The Blackstone, which is one of the biggest fund manager, basically in real estate, in commercial real estates, now is limiting redemption. That is not a good sign. If that also caused the commercial property side to also implode, then we can see that this crisis is beyond the banking sector. Okay, so we want to stay short. Basically, the dollar bear. I want also to go short on the equities, but I have not found the right timing yet. Okay, over in dollar CAC, you can see that the dollar has been declining. So the rebound coming at 134.06 is still very tentative. Not sure I want to sell this thing because the rebound is so shallow. Top side, I think about 135 even is well. I think the dollar CAC can rebound to. I have no position and I don't intend to get into one. Okay. Over in cryptocurrency, we continue to see the consolidation in the Bitcoin and the other digital assets. Basically, this is more than 2 weeks now. Okay. The high traded at $129 and 29,380 was actually traded on March 25th. So from then until now, it's more than 2 weeks. So the market is still basically going nowhere. I think the risk to the downside is quite apparent. There is a possibility, if you are very optimistic, we do a very shallow pullback to somewhere around 26,300, and then that's it. Markets may consolidate around here before it gathers enough strength to accumulate before it punch higher. Or the other way is the market break 25,600 and go all the way to 23 to 24,000 levels. Now, this is a lot better areas to actually enter a long position, but we will have to see what happens next. In the meantime, this is all I have for you now. Do remember, tomorrow is half a day because of the Good Friday holidays. So do watch out because tomorrow is also non-farm payroll. Okay. So in the meantime, take care and be safe. Bye-bye.